results, and now big tech is on deck. Our next guest thinks the market may be a bit too optimistic about earnings growth this year. Joining us now is Keith Gangle, Gradient Investments Portfolio Manager. Keith, it is good to see you. So maybe we'll just start with the news today. You know, the S&P 500, Keith, rose to an all-time high this afternoon. So I'm curious, as you look out, 2024, in December 2024, Keith, where do you think the SPX, the S&P 500 is? Is it higher, lower, about the same?
We think it's higher. It's going to be a grind to get there. We think at the end of the year, it's going to be more of a normalized return, like that 7 to 10%. So obviously compared to last year, that'll be a little bit less. But I think it's going to kind of, those first 3 weeks, kind of what the market's going to be. It's going to be a grind. When I was talking to people last few days asking, where do you think the market is, year to date? Most people are, the market's down, 2%. In actuality, it was flat to slightly up. I think that's what the year is going to be. I think it's going to be a good year, but it's going to be a grind to get there. And earnings will be the driver. When you mentioned that I think earnings is a little bit too high, I think estimates are for 12% earnings growth. I think that's too high. I think it's going to be that 7 to 10% range. And if it's in 7 to 10% range, I think that'll be well enough for a tailwind for the overall market to grind higher. But it's going to be fits and starts. I think it's going to be a lot like we've seen this first 3 weeks.
And Keith, there was a lot of excitement at the last press conference. People called it the Powell pivot. Whether or not you believe that, I just want to get to the heart of the matter that rate cuts were getting priced in aggressively, over 80% chance in March, and that has now dwindled to less than 50%. What do you think happens, and then how do you think the market prices that?
Yeah, you're exactly right. And that's kind of what the last little lift off in the end of year was with the Fed expectation that we started seeing a cut. Right, money gets easier. Stock market traditionally does well. I think people got a little too excited on that. I think that 80% is down to, like you said, 50%. I actually think it's probably closer to 0. I don't think the Fed needs to start cutting yet. But on the flip side, I didn't think the Fed needed to raise last couple rates. So I think now they're in the done. We're not raising rates anymore, which is fantastic for the overall stock market. The question is, when will they start cutting? I think that cutting will happen later in the year. So I do think they've cut, but it won't be as soon as what people want and maybe hope. So maybe that could be a little bit of a disappointment here in the next few weeks. We'll see. But I do think earnings will be the key driver, and we'll see a lot more earnings reports in the next 2 weeks.
And Keith, as the S&P 500 rises to this all-time high here in today's trade, how does valuation look to you?
Yeah, valuation is full, so that's one thing I worry about. So that's why we need to see that market grow. 12% EPS growth would be fantastic. I think it's more like that 7 to 10% return, and that's where you can get that market going up with it. I don't think you're going to see valuation increase at all. So we think the Magnificent Seven would kind of hangs in there. Everybody's expecting some kind of selling of that group and get wider in the market. We think that could happen, but we also still like those names as well.